Hey, Sats fans. What's going on? It's Brady here, head of education at Swan Bitcoin. I'm here with my boys, Preston Pysh and Andy Edstrom, for our quarterly report.
What's up?
What's up? How are you guys doing?
Great.
Great as always. Great as always.
Yeah,
What a year it's been, Brady, Preston.
it's been an
It's been
incredible
quite
year,
a
man.
year.
And we've been here for it all year long, meeting up once a quarter to hang out and talk Bitcoin and reflect and then also project into the future. You guys have made some great calls this year, got to say. Andy, let's start with yours. You had a great call in the last episode in the third quarter talking about a setup for some cascading liquidations due to leverage. We've seen a couple of incidences of that just in the past quarter or so. So this is something that you nailed it. Previous conversation, both Q2 and Q3. Can you just talk a little bit about that call and what you learned by seeing it actually play out in reality?
Yeah, thanks, Brady. And it started when I published this article on BTC Times in March called "Don't Get Wrecked." Right, that was the title. And I talked about the dangers of leverage. And the projection I made was we'd probably get to six-figure BTC, and then we'd get some bear catalyst, and then at some point the leverage would kick in, and there would be pain. So unfortunately, we didn't get to 100K Bitcoin before we got the first leverage liquidation, and that was that was earlier this year when the mining got kicked out of China and miners had to sell BTC to fund their relocation costs, as well as some other causal factors we all know about. And then, unfortunately, we got another liquidation more recently, and I don't know, man. I feel like the degen traders just don't seem to learn their lesson. I feel like it's going to keep happening. I hope that people recognize the risk. I'm sure there are listeners that have learned the hard way, and it's okay to know that you're greedy and admit it, and then just take a small piece of your stack and risk it on the degen levered trade. I would just say don't risk much of your stack. Just know you're going to lose it, and and make peace with that. And that's fine, but just know it's a risk.
Preston, tell me your feelings about these guys who got their asses handed to them.
I'm just happy that we're participating in a free and open market. If people want to go out there and take a lot of risk and a lot of leverage, I'm here to encourage them to do that. It's not the approach that I take. They can just do whatever they want, right? Let's treat people like adults. And, if you make a bad decision, you'll pay the price. And I'm here for it. I mean, that's really all I got.
Yeah. How do you think that this pattern will continue? I mean, do you think this pattern will continue to play out? Is this what we can expect from like the behavior of the market now? We're just kind of on this cascading liquidations, build it up, tear it down, drunken walk up and to the right.
The problem that you have with these particular markets is they're extremely volatile, especially when you're comparing them relative to traditional finance, equity, and whatnot. And with that, especially when you have something that goes up on average about 100% a year for a decade straight, it is a massive incentive for speculators to step in and to just trade the living hell out of it. A lot of them are going to significantly underperform just holding long, but they're going to think that they are professional traders. If the Bitcoin index goes 100% and somebody who's trading it all over the place and actually paying their taxes is doing 70%, they still think that they're a rock star and they still think that they have incredible skills because they did 70%. And they're not realizing what the opportunity cost of just holding long probably is. And some of them are going to outperform, which, I would strongly suggest is more luck induced than anything else. But who am I to know one way or the other? I just think that people way overestimate their skill when they're quote unquote trading based on technical factors, especially after accounting for taxes.
If you do account for taxes, which wrecks so many of the noobs in this space. That's when your eyes go wide open. You're like, oh, maybe I shouldn't be trading. And then you have to sell all the Bitcoin, your precious Bitcoin, to pay your taxes. Don't do that. Don't do that. Stack and hold. So we had some interesting, sort of, Fed speak yesterday from Jerome Powell, indicating they're going to keep rates down, but reduce QE purchases to only $60 billion a month. So risk assets seem to like this decision, but how do you guys feel about it? What's your take?
Yeah, it was, the markets basically sort of breathed the sigh of relief. There was a lot of anxiety, I feel like, both in equities and in Bitcoin and just kind of risk assets across the board. And I don't know, I think it was Croesus BTC asked me before the announcement, like, hey, what's your call? And I was like, I don't have a strong view, but like I kind of think we might get some relief if it's not terrible. And it wasn't terrible. It was kind of all expected, and we got very modest relief rally, but then we kind of gave it back today. So I guess I can give the Fed credit for, telegraphing a message and implementing a policy that didn't spook markets. We were they were at 120 billion a month of buys, and then they stepped it down to 90, and now down to 60. And at this rate, they're going to be done by second quarter next year, and we'll be in a position potentially to start raising rates. And the curve has flattened, right? So if you look at the difference between yields on the 10-year Treasury and the 2-year Treasury, they've definitely come in quite significantly, although we're not that close to an inversion. I mean, I was talking to Bitcoin Tina the other day. He's pretty worried about the Fed, making a policy error, basically tightening too soon. And I am also somewhat worried about it. I don't see it yet in the curve and the steepness of the curve, but we could get there. So Fed's, I mean, they're in a tough position at this point, right? As we know, generations of Fed chairs and FOMC members before them have dug themselves into the grave or painted themselves into this corner they're in. So it'll be a miracle if they can get out of it, without too much inflation or without dumping markets in the long run. So I guess you could say, considering facts and circumstances, this announcement was pretty well played. But I guess I'll hand it off there to Preston.
So I think it's showing that they're completely inept. And what I mean by that is you've watched the entire bond yield curve sell off for the most part. The 20-year and the 30-year has been pretty flat since I don't know what. Let me look at my chart here. Since March, it's actually been kind of bidding on the 20 and 30-year. But everything else, shorter duration, has been selling off like crazy. You've watched the 3-year go from at the start of the year, you were at about 20 basis points, and today you are at 80. So that's a 4x move just on the 3-year. So, I mean, it's selling off, and here's the Fed sitting there like doing nothing, right? So the whole market's starting to account for these CPI prints. Our last CPI print was 6.8%, and you got the 10-year Treasury sitting at 1.43%. So I don't know. A negative 500 basis point spread to me sounds like we're in crazy town, and the Fed's still holding at zero. And so they made an announcement that next year they're gonna, they're gonna start raising rates. They're gonna raise it 25 basis points, right? It's a total joke. It's just an absolute joke. And the only thing that it's showing me, at least, is that they're completely inept. That the market's, driving in the seat of the car right now, and they're just along for the ride.
So do you think we'll see any raise next year?
Yeah, I think you could. Yeah, I think you will. And I think that the rest of the market, especially if we continue to see these CPI prints, because I don't know. So I look at a lot of the gauges, a lot of the commodity gauges. To me, it might seem like 6.8 might be the highest print that we get. The next one might come in at a very similar number. I'm not really expecting it to be higher. If it is, it's probably not going to be by much. And I think that persistence of that print in the 6% range is going to really kind of rattle a lot of cages, because everyone, I think most equity investors are praying that it's transitory and that it's going to come back down in like the 3% range. And I don't necessarily see that happening. I think that you're going to continue to see it pretty persistent above 5%. And if true, you're going to continue to see all these durations, at least the shorter durations in the curve, really sell off. So I think they're going to try to catch up to make it look like they still have some semblance of control. But that's going to be the reason why. They're not going to be doing it for reasons that the market needs higher rates. The last thing the market needs is higher rates, because it's already kind of demonstrating, in my opinion. I think it seems like it's starting to sputter out, especially when you get into equity markets outside the United States. The U.S. markets are still, kind of hanging in there, but when you go to all the other markets around the world, they're really kind of demonstrating that we're kind of at a fever pitch and it's starting to cool off.
So just for partly to provide a contrast, and we can compare notes, 9 months from now, I'll take the under on inflation. My best guess, and look, it's a guess. I mean, none of us really know what's going to happen, but my best guess is we get some relief on inflation. You've kind of started to see it in the commodities complex, right? And commodities are just, one component of the final product inflation, but commodities have really spiked earlier this year, and they've given up a decent amount. I feel like there might be one more chance at sort of a fake out, down move in inflation. Let's say in reported CPI inflation, and let's not get into how that's measured at the moment, but I feel like there might be one last shot for the Fed to breathe easy, and then I could imagine inflation, coming back in a real significant way. I don't know, later next year or even the following year. It's sort of too obvious and easy, a trade that, we're just going to go straight up in terms of inflation. I do think that's where we end up, this decade or in the next few years, but I think we might get some significant relief in the latter half of next year.
I agree with that. Yeah. I'm with Andy on that. I really do think maybe that the 6.8 that we just had is probably going to be the highest print in the coming 12 months.
Yeah.
But
I think we're saying the same thing.
Yeah. I see it the same way. But when we do go through, when it eventually throws the fit, when we have the impairment fit, the credit, meltdown because of the fractional reserve system and just how this is constructed, and that's what will happen. When it does, the response is going to be gangbusters, and it's going to make the COVID liquidity pump look like nothing. And what you're going to see happen in the supply chains from that response is going to make this 6.8% number look like a joke, in my opinion. And that's when it's going to really kind of be that realization in the marketplace, like, holy hell, what is happening here? As far as a timeline goes, you're probably, and this gets like, this is just not something you even want to really try to predict. But if I was going to say the earliest that I think you would see all of that kind of play out, you're into 23 at probably the earliest, right, Andy?
Yeah, I agree with that. And this is why, it's hard to play the game of, timing, when should I make my next BTC buy, right? If we finally get a correction that then forces the Fed to open up the floodgates again, might there be a point in time when price dips down and you got your limit orders in and, you pick off some cheap corn? Maybe. But will that be from, 50K BTC, or will that be down from, 80 or 100? And so I don't try to get that clever. I just keep stacking. I just keep saving in Bitcoin.
Amen.
Yeah.
Yeah. No, if there was one thing, Brady, I'm sorry to interrupt you. So if there was one thing that could maybe throw a wrinkle in some of this, is if the debt markets over in Europe and the rest of the world outside of the U.S. get a little wonkier faster than what I'm anticipating, because I'm expecting to start getting. I'm expecting here in the U.S. for to get a inverted yield curve probably in the summer time frame and maybe into the fall of 22 is what I'm thinking, that you might start seeing that the yield curve really get flat and maybe go inverted. And if true, that kind of gives you time in the market for some of this to really kind of play out. But what I'm not maybe accounting for is already over in Europe, you're seeing like the 30-year and on their bond yield curve start to break through like 30, 40-year trends that, and I mean, they're all just, the whole yield curve over in Europe is just compressed down to nothing across all durations. And so it's just totally jacked, like way worse than in the US. And so that could maybe be a catalyst to maybe accelerate things a little faster than the timeline that Andy and I are talking, but who knows?
How does I mean, the dollar system is intertwined with Europe in just in ways that's hard to understand. This whole like euro dollar system, and there's amount dollars that are being printed out there that are kind of outside of the control of U.S. banks or the Federal Reserve, which is really interesting. Does that create any additional like risk for the dollar itself and the collapse? Like if something happens in Europe, then you've got systemic risk just for the dollar through that euro dollar system. How would that play out? Or would that even have an effect?
I sort of think the opposite, if I understand your question, which is like there's all these dollar denominated liabilities, right? The world is basically short dollars. And when you get stress overall in the financial system, there tends to be a bid for the dollar, right? People flee to the dollar as a relative safe haven. So yeah, I think actually if you start to get stress and credit overall, you get a bid for the dollar gets stronger. Will that eventually, not be the case? Yes, eventually. But, I'm kind of in the Michael Saylor camp at this point, thinking about, okay, the dollar's not going to die anytime soon. Moreover, if and when we get broader stablecoin adoption globally, it's more likely that some of these weaker currencies get picked off. Bitcoin keeps growing in the background. I don't think that I think the dollar could weaken next year. I mean, there'll be up trends, there'll be down trends, but are we anywhere near the death of the dollar or the loss of the dollar's reserve currency status? I really don't think so. It's possible, but I don't see it happening, in the next few years.
I completely agree with that.
A lot of nations and corporations would have to agree that Bitcoin's ready to take on that role before they would abandon collectively the dollar, I think, or insane hyperinflation would have to hit. But it feels like this decade is gearing up to be potentially that, as we've been talking about as Bitcoiners for years and years and years now, this process of hyper-Bitcoinization, it happens, gradually then suddenly. And even as Bitcoiners, we have a hard time imagining how fast this might actually play out. If we look back, in 3 or 4 years, and this has played out incredibly fast in the interim, I would say that what is happening right now would be very obvious in retrospect, the precursors to hyperinflationary events that would lead to the death of the dollar in a short amount of time. So I there's, as Preston likes to say, I think there's a non-zero chance that it happens.
Well, what do you think now, Preston? I mean, I think I've heard you say, okay, maybe we got 5 years, but probably not more. Is that still kind of what you're thinking?
Yeah, I think my time frame is 5 years to probably 10 years on the long time frame. Yeah,
I can agree with that. I used to think, like every excited Bitcoiner earlier in my journey, I was like, it's happening now, and now I think 5 to 10 is a great estimate. But as you point out, Brady, we don't know. It could happen sooner.
Yeah.
My concern on the 10-year time frame, right, is we're already at the point where we're almost taking yields nominally negative on every government issued fixed income instrument. So if we're there today, almost, right, in most places we already are, how in the world could the world handle another 10 years of that? And that's where I guess for me, 10 years is kind of like the longer time frame, because I just don't know how society could possibly handle another 10 years of rates. Because I mean, they're not going to stop here. They are going lower. Like, they are absolutely going lower from here. And that's when things are going to get really wonky and really strange. You think we're in bizarro world right now. Give this another 3 years and where they take yields next, you're not going to believe what you see. And I just I can't envision a world where that lasts more than 10 years from now. But hey, who knows? Like, I don't know, but I find that to be, I can't imagine how weird things would be.
I agree. And now I'll layer on, the macro and the geopolitical, and, someone who I know has shaped both of our thinking, Preston, you too, probably Brady, that's Ray Dalio. And I just finished his most recent book. And, he puts publicly, and he admits this is kind of a finger in the air number, but he puts a 30% chance of each of the following in the next decade. One is hot war with China, and two is, basically civil war in the U.S. And if those are independent, which they're probably not independent probabilities, but if they were, that would say, 50-50 that we're going to face something really, really difficult in this decade. And so if you had, as you pointed out, a long time with zero or potentially even negative rates, and then you layer on, the fourth turning, the end of the long-term debt cycle, potentially hotter conflict, that could be the confluence of events or the catalyst for, things breaking down for the fiat system. Because that's the dynamic in which now debt claims, when there's real conflict, either within a nation or among nations, the debt claims don't stand up, right? Now it's sort of every man for himself. The hardest money, the type of money that is no one's liability is what people want to hold. And that's potentially a scenario where things get real.
Yeah,
And
that's where it's
on a lighter note,
yeah, I mean, yeah, we got out there. We got out there a little bit faster. This is a quarterly review became. Let's talk about the future of the entire human race over the next decade or two. But that's what we're here for. I mean, that is the gravity of Bitcoin and what we're here for. It's an incredibly important moment in time, and you have to sit back sometimes, and when your breath is sort of taken away from you when you have a moment of clarity on just how important this moment in time is for humanity. It's a true inflection point. Let's dive back into some Q4 news. This week, the country of Myanmar announced that they'll be adopting Tether as legal tender. The growth in stablecoins market has been, tremendous over the last several years. It's obviously got a use case, probably, beyond seemingly providing liquidity in crypto exchanges. So Preston, recently you tweeted out about this in a response. I think it was to Danielle DiMartino Booth tweet. Do you feel like the stablecoin adoption will speed up Bitcoin adoption or slow it down? Would love to hear you expand on that question, answer your own question, and maybe talk about it here with Andy a little bit.
Well, there's a reason they're concerned about it. And it's funny, whenever they're talking about their concern to the stability of the system, they're more concerned about stable coins than I think they are about Bitcoin. And the reason why is because you're getting that immediate clearance. They're used to adjudicating books each night as they close out and allowing time for this fractional reserve system to figure itself out, where there's impairment, where there's not impairment, and almost like a breather into the system. And by them being able to control the rails of the dollar itself and being able to settle not instantaneously, they're able to kind of control and manipulate the market in a way that keeps stability in the frame of reference. When you start handling a stable coin that immediately clears, that can't be undone. And that's the other really big point about a stable coin. Not only does it immediately clear, but you can't undo it. And that is something that I think scares the bejesus out of central bankers, is this idea that if I send Andy $10 and it immediately clears and he has it, nobody can go over there and claw it out of his account and send it back to me. And it happens near instantaneously. And so when you're in a fractional reserve system, that poses a major issue when they're used to markets being open for 7 or 8 hours and closed on the weekends and all of those kind of things. That's what they're scared about. And so my point in posing the question, and I didn't answer the question, but I guess I will now, I think it speeds up Bitcoin adoption, because what you're now having is the system just starts, think of it like a mechanical system where the pipes are closed off, they're only allowed to flow, and then everyone's making sure that the tanks are balanced, you know, the holding tanks are balanced so that there's not too much pressure in the system and it blows. Now you're telling everybody you have to keep all the valves open, and this thing has to perform on its own without interruption. And if there's a systematic error in the plumbing, it's going to burst. And so I think they're very scared to allow all the valves to be opened. And I think they should be. So that's just how I personally see it. And, you know, when you got Bitcoin running in the background, nobody can manipulate it. It's got a finite number. It's fixed. I mean, that's the beauty of Bitcoin versus a stable coin, is as they continue to base the dollar, the stable coin supply is just going to keep going up right with it. Right? They're going to put more in the treasury and they're going to mint more stable coins, and it's just going to keep inflating like the dollar. I mean, it doesn't, if they want to come out with their own, you know, immediately settling irreversible dollar, which irreversible would be a complete misnomer because they're controlling, you know, the protocol itself. You know, like they're going to keep adding more units. It doesn't matter. They can't do what Bitcoin's doing. It's just fundamentally impossible when you look at the fiscal side of how they make decisions in the spending habits across the globe and the incentive structure for them to keep expanding the credit. So, you know, those are some of my thoughts on it. And when you look at the size of the stablecoin market and how fast it's growing, I think it's just scaring them half to death. And they should be very scared of this, because it's stepping in and it's totally bypassing them. And because it's competitive, and we've talked about the game theory a whole lot, they don't want to not play, because they know that if they don't, somebody else is going to step in there and play. And boy, oh boy, they're going to lose market share, right? This is a battle for clearance. This is a battle for the network effect of controlling the currency in the settlement layer of the world. And if they don't play the game, they're going to get beat out by the other players that are vying for it.
It's a pretty cool development, Andy. You know, I didn't personally see Tether being adopted as a, you know, legal tender, but it makes sense, you know, in retrospect. It is obvious to me. So it's interesting development. Yeah, I'd love to hear you riff on what Andy had to say and just give your take in general.
Yeah, no, Preston nailed it. And the only thing I would add is, you know, Tether is still pirate coin, right? I mean, yeah, it's a stable coin, but it's the non-compliant stable coin. And so it makes sense that it's being adopted by a government that is sort of on the fringe, let's say, at least of Western, you know, the Western geopolitical sphere. And it's a good reminder, I think, to me, of how the the government has abused its weapon of sanctions and cutting countries off from the global dollar system. I think that that's one of those weapons that you use sparingly, and the U.S. has not used it sparingly, right? The government has not used it sparingly. Basically it gets used all the time, and countries are forced into a position of routing around. You know, they really want to use dollars because they're short-term stable in purchasing power, and they're generally accepted. But Tether is this unique, interesting beast that has managed to generate a ton of market share. I don't know, $72 or $75 billion worth. And I do expect compliant stable coins to be a much bigger deal. And I do expect USDC to sort of continue taking share of the overall stablecoin market. But yeah, we should not be surprised that Tether, in retrospect, as you say, we should not be surprised that Tether is getting broader adoption, especially among countries that have, let's say, spotty access or worry about their access to the U.S. dollar system. But yeah, I was surprised. I mean, I did not anticipate that happening. But I was also surprised by El Salvador adopting Bitcoin this year. Sorry, go ahead, Preston.
Oh no, I was just going to say I think it's a little bit of a risky move by them to specifically choose Tether because, you know, if the Fed gets upset with this decision and they want to go play hardball and they want to try to shut down Tether, now you got a country that's relying on this legal tender token that basically just got chopped right at the knees, because the Fed can do that. They can shut off, they can claw their treasury, Tether's treasury of dollars right out from underneath of them, and then it gets nasty for that stable coin. So where Andy's talking about the policy, I agree with him. I think that this is where it's going to be really interesting to see how the entities that are managing these various stable coins, and Andy mentioned USDC, and I agree with him. I think that they seem to be playing the politics best out of the stable coins that are out there. And it's going to be interesting to see which one, because I suspect what's going to happen is you're going to have the U.S. and other government entities that are going to say, all right, we like you. You seem to play nice, and you are now going to be an accredited entity that can deal with stable coins, and you're going to listen to everything that we say. And if you don't like it, we're going to shut you down, and we can pick somebody else that will play with us. And I think that that's where it's going to get a little interesting on the stablecoin market, and a lot of these other tokens. I don't think they really understand the power that the Fed has at controlling those specific rails. And in the background of all this is Bitcoin, which is just like nobody can shut that down, right? Like you cannot shut down Bitcoin. But these other things that rely on treasuries with dollar deposits that the Fed can either say yes or no, whether they actually sit there or not, I think that's a very important consideration as you're thinking about stable coins.
100%. Andy, this past month, you hosted a fundraiser for Aarika Rhodes. She's a candidate for Congress running in a primary against Brad Sherman, who is probably like the biggest Bitcoin hater in the government, if not, one of the top three. And this year we've seen definitely the emergence of Bitcoin as a political issue. And lots of politicians have spoken out about Bitcoin, shared their thoughts. Hillary Clinton came out and obviously made a very a planned sort of presentation of the narrative that she wants to establish, and probably others, will follow her suit, couching Bitcoin as causing instability, and you can it's so obvious setting it up for this financial instability that we're already in and headed into much deeper, to be blamed on Bitcoin. So that will certainly be happening more and more over the next few years. It's interesting though, because Bitcoin is it defies categorization on a political front. Like you can make arguments like the positives of Bitcoin, arguments for Bitcoin fall into narratives on both sides of the political spectrum. And I think it's really interesting to watch it develop, just to see how Bitcoin is presented in the political sphere. And I do think it's important potentially to how Bitcoin is adopted, not if Bitcoin is, works or wins or whatever, but how it does, could have a big impact on how it's, adopted in this country, for instance, and around the world. So I think it's important personally that we work and there, I know you're on board with this, and there are coalitions that are developing to work to try to make Bitcoin a bipartisan thing, as much as that can happen, or that can be helped anyway. Would love to hear your take on Aarika and just the bipartisan Bitcoin push in general.
Yeah, so I agree completely with you, Brady. And one of my personal missions is to do my tiny part to help make sure America is safe for Bitcoin. And it already is, right? Things are looking good. A bunch of mining moved to this country. All signs are that we're going to have peaceful adoption. But given that Bitcoin has already won, which I think it has, I think we can get to mass adoption the hard way or the easy way. And so I feel that, if any of us can do our small part to take the easy path, that's worth doing. So that's a big part of why I support Aarika. Aarika is both running against Brad Sherman, so that's reason enough to support her. But she's also, I mean, her enthusiasm is infectious, and she's a teacher. I have a soft spot for educators. She's big on financial education specifically, and I really do believe that the lack of financial education in our primary and secondary school system is a major factor for why this country is so far in debt. Right? It's a major factor in why a large portion of the population is basically working day and night, just to service the unsustainable debts they've taken on, whether it's credit card debt or education debt, et cetera. So yeah, and a lot of people doing good work on this, CJ and Amanda Cavallari and Dennis Porter, and yeah, I'm heartened to see a little more work and more actual organization on the political front, and I sort of reject the idea that, we should just hide in the shadows and let Bitcoin win and, burn the system down. I'd rather stay in the U.S. I have a family. I got kids. I'd rather make this, I'd rather this transition be as peaceful as possible.
Preston, what do you think, man? I don't think I've heard you talk much about like your thoughts on Bitcoin and politics. And
I steer
if
away.
you don't want to talk about it, I understand.
I steer away from politics at every opportunity. I will say this: I'm a fan of her, and hopefully we can get some memers to help her out. I think that if there's anything that she wants to step up her game, and obviously she doesn't need to elicit this. We just need the memers of the community to go in there and find out who Sherman's biggest donors are, and just work their magic, and they can come up with way more creative content to sway this than probably anybody else. But I obviously want people that are pro Bitcoin. I want people that are pro free markets. I want people that would like to see, and this one's a real stretch. Term limits, I think, are one of the critical variables that are wrong with the system today. We don't need people that are trying to be career elected officials for their whole life, because we need people to make bold decisions, and decisions that aren't based around their next reelection campaign. If they can't balance a budget, there needs to be some type of lottery system that makes it inhibitive for 10% or 15% of them to be reelected. That would be completely lottery based. There's some things that need to happen, but that's about the extent of what you'll get out of me.
No, that was great. That was great. Dave in the chat said age limits. Yeah, I actually tweeted this out. I think we should have age limits, age maxes. We have age minimums. I think it's like 25, 30, 35 for the House, the Senate, and the President. And so if we have minimums, we should have maximums. And I tweeted that out. And then, by, I'm sure, coincidence, Elon Musk tweeted the exact same thing out like 3 days later, almost word for word. So I don't know. I think he's watching my account.
He's stalking.
He's with one of his like anime accounts or something.
Clearly.
Preston,
one of his Dogcoin accounts.
Yeah, one of his Dogcoin accounts. He really liked the idea. So I want to go into this thread that Preston posted this week. I loved it. It got me all fired up. It was just a really great way to present this data. It was a very effective way to present this data. Just like it was like one punch landing after the other, and then it was just like this final little like death blow at the end. And I hadn't gotten so excited about a thread for a little while. So I'm gonna share my screen, and let's just talk through this. I know Andy will have some commentary on it too.
Okay, so in general, I was trying to just model all of the market cap for equities across the whole globe, and it's a little tricky to do. And so I was just going through it, and I was like, all right, so I got to make sure that these are weighted. And whenever I'm looking at all the different indexes on one chart, the thing that I didn't like about it was the weighting. So like you're seeing maybe India blow out and it's just booming, right? And well, that's just such a small market. I think it's only like 2 to 3% of the overall global economy is that market cap, right? And so I wanted to weight it, and whenever I weighted it all and I compressed it into a single line, what I was really trying to understand is, are we starting to see a cap? Or are we starting to see a top in equities from a global perspective? And the reason why I was trying to understand that is because I'm looking at the U.S. It's still booming. It looks like it's starting to roll over a little bit. And now that the fixed income market's starting to tighten, you're starting to see the Fed say that they're going to even, start to tighten the federal funds rate. I'm thinking, okay, this might be getting very toppy, but I wanted to see it from a global perspective because maybe Europe, maybe Japan, maybe China are already selling off in a more aggressive way because those are the main ones that are really kind of driving the global economy outside the U.S. And so I just wanted to consolidate it all into a single line. And so when I did that and I saw my thesis and what I was expecting is that we were kind of topping out was true. And as you, scroll down just a little bit more. Scroll down one. Yeah, keep going. One more.
Yeah.
One more. This one right here.
There we go.
That one. So when you look at that chart right there, you can see that it's really starting to look like a top from a global perspective. And so I was just like, let me just readjust this for M2. And I was just kind of curious what it would look like. And if you go to the next one down from there, it was kind of insane what I saw. And I was like, holy hell, from the bottom of the 2009 crash, and I'm talking the bottom, not the top, we are completely flat from that period of time when you readjust the global equity index against M2. I'm just thinking, oh my God, this is crazy, right? And I wanted to present it because what everyone sees is that first chart, which is the NASDAQ or whatever local stock index that they're accustomed to in their country. And it's just going straight up. It's going parabolic. Yep. But whenever you adjust it for all these other things, you're literally flat from the bottom of 2009. And I was just like, this is crazy, right? Absolutely. So I tried to lay it out in a thread that kind of like walked the reader through my discovery process of like how I was trying to solve the puzzle of kind of like understanding where we're at in space and time. And what I found and what I discovered, even for myself, I remember sitting there looking at the chart and I said, oh my God, this is crazy.
That's the same experience I had.
Yeah, this is wild.
Yeah, for those of you listening over on Spaces, we're going to try to throw it up into the nest. If not now, then when we come over for the Q&A, and on the podcast, it'll be in the show notes. But definitely go through the thread. And Preston cooked up these charts, and it's very impactful. Chart, speaks 1,000 words for sure. And then of course the kind of closing salvo is let's take a look at how this affects the bottom line, the real world, right?
And this is one of my favorite things that Michael Saylor has really kind of introduced to the community is this idea of inflation being a vector. And so when you're adding all these units into the system, where are they ending up, right? And who has the first cut of selecting where they go next? And when you walk through that process and you realize how much quantitative easing has been used over the last decade, you quickly realize that where all these fiat units that are being added into the system are ending up, they're ending up straight into assets. And it's just when you walk the dog and you follow the path of how these units are going, they're going in bidding asset prices. Now, whenever that happens, what's taking place is you're clawing that out of the hands that was somewhat distributed 10 years ago. And 10 years before that, it was even more distributed amongst the population. But as you continue to exercise these policies, what you're doing is you're just polarizing the ownership of anything that's equity-based and debt-based straight into the hands of the few. And, it's making it harder and harder for everybody else. And so when you're looking at like the velocity of money, a lot of people hate that term velocity of money. But when you look at that and you look how it just keeps going down, that's why, is because they're having difficulty adding units into the system and it actually trickling down into the populace. Instead, it's just going into the hands of the few, and they're just Okay, well, I'll just buy more equity, which will generate more cash flow for me, and it'll generate higher market caps. And, you know, I'll go out and buy another 3 yachts, I guess. I mean, at what point, how many yachts can you buy before you just say, you know what, I'll just buy more stock in Apple or whatever?
It's such a monumental crime. It's fixing on the grandest scale possible, fixing a game. You know, let's take a quick break there. That was fantastic. Hold on, I didn't give Andy a chance to weigh in on
Yeah, I mean, it's a really
starts.
sobering analysis that Preston has presented here, and I guess my thoughts are, one, not only is it clearly the Fed's, not only clearly is the Fed exacerbating wealth inequality, making the rich richer, but they're denying it as they go. And that they recently, announced some social or ESG mandate. I can't remember the exact, statement, but it was like, basically they were saying, we're here to help with this, equity problem or social problem. And it's like, no, guys, if you want to help, like, stop printing money, stop it with the QE.
Right.
And let the zombies die.
Yes,
right?
let the zombies die.
You gotta let the zombies die.
Yeah. And the other thing it brought to mind too is, when you look at where value has accumulated in the last decade, if the total, as Preston points out with those data, if the total trend versus M2 is flat or down, then what does that mean? Well, it means while the S&P and specifically the NASDAQ and the tech and software sector have made attractive returns, it means everything else has been, crap, right? It means everything else is going down in relative terms, or in, I don't want to say absolute terms, but maybe like absolute, monetary base adjusted terms. And it reminds me of a conversation I had with a fund manager that some of my clients are invested in. And a few years ago, I sort of prodded him. I asked him the question, and the question to him was like, what if Mark Andreessen is completely right and software eats the world? And what if literally every dollar or more than every dollar of market cap creation just accrues to software, right? Like if the overall, stock market goes up by X%, or let's say the S&P goes up by X% over a period of years, what if all that gain accrues to the big software guys? And so far lately, it kind of looks like that's playing out. And partly that's a US story, right? Like obviously the biggest internet giants and software giants are US based, which tells you a little bit about why the NASDAQ and the S&P have outperformed compared to foreign markets, which have been really disappointing for the last decade. But yeah, it just puts that all in perspective, and it does make me worry that everybody feels richer, right? Because these asset prices, at least in the U.S., are going up, and yet when you adjust it to the monetary base, as Preston points out, it doesn't look that great.
It's terrible. It's awful. Let's take a quick break. We're going to have a little interim here that's a little bit more cheery. We're going to come back, talk a little bit more, a few more questions here for these guys. Then we're going to head over to Twitter Spaces. And there's 300 or 400 of you over there right now, and everyone on YouTube and wherever else you're watching can head over to Twitter at Swan Bitcoin and join and ask some questions to Preston and Andy. It'll be a lot of fun. All right, we'll be back in just a couple minutes.
This holiday season, give the gift of Bitcoin to your loved ones. Swan delivers your Bitcoin gift along with our world-class education and client service. Create a Bitcoin gift and wrap it with a custom message for your family and friends. Dash away with your gift. Your recipient will receive an email right away, that easy. Give the gift of generational wealth. Give Bitcoin.
Okay. It was shorter than I thought, but that was pretty good. We have good job, Brecky. Good job, Mike. This is a really nice little ad. Swan has brought back gifts. So you can go into your Swan account and give a gift to anybody. You'll get an email. You can schedule it for when you want it to arrive on Christmas morning, perhaps. And, we'll obviously carry them down that path, becoming a Bitcoiner, and help you help you walk them along that path, I should say. So really excited to bring this back to the product. Of course, Swan was born out of Give Bitcoin, which was simply a product to allow you to give Bitcoin to your friends and family. Became Swan, and now we've kind of brought it full circle. So excited to see gifts back into the app. All right, guys. We talked earlier in Q1 during our Q1 quarter report about the appointment of Gary Gensler as SEC chair, and you both thought that it was a good thing for Bitcoin. That obviously he was, understood Bitcoin, well researched. He taught a class on crypto and blockchain at MIT, etc. So after a year or so now, what do you think about Gary's impact on Bitcoin, and what do you think how do you think he might impact it over the next year or two as he continues to be the SEC chair? Let's kick it to Andy first on this one.
Yeah, I think that Gensler is behaving like a democratic regime regulator, which is actually doing stuff. I mean, under Republican regimes, you tend to have relatively hands-off from the regulator. That's what we saw with Clayton under Trump. And now there's a new cop on the beat, and he's saying more aggressive things, although I don't know that we've seen all that much action. So far, he's more hat than cattle. I do think that there's never been a better time to be a Bitcoin-only company, right? Because, yes, most digital assets, crypto assets were definitely illegally issued securities, probably still are. The only reason they wouldn't currently be is because, by some exception, they're deemed decentralized enough. So I am still optimistic that we're going to see more enforcement actions against, the frauds, basically, although we haven't really seen that much so far. So those are my current thoughts.
So Preston, give us your thoughts, but also touch on the ETF issue. I mean, that's kind of the biggest, I think, if he's going to do thumbs up or thumbs down to a spot ETF next year. I'd love to hear what you think.
That one I'm frustrated with. I'm sure people have seen me kind of beating them up on Twitter from time to time on that particular issue. It just doesn't make any sense to me. And it seems like it's more of a bureaucratic political play between him and the CFTC or something. I don't really know. I do like the fact that Gary actually knows what he's talking about with respect to the topic with Bitcoin. And he seems to be very pro Bitcoin, not the rest of the space, the digital asset space, with respect to how he pretty much wants to regulate everything else. And for me, that's perfectly fine. I really don't have a whole lot of interest in some of the other things today. And I think that they are very much equity-like. And so, that's really his position. Now, where I'm a little interested, so we're getting through this current administration pretty fast. Like time is moving out, and if he's going to do something, he's going to have to do it here pretty soon. And I think I'm more concerned about who follows this administration. What's that person like? How much do they actually know about the space, or is it just some type of political favor of somebody who's put in charge? What agenda do they have? I'm more concerned about that than I am with Gary Gensler. I think that in general, if you're a Bitcoiner, I don't really see that much to be concerned about.
All right. I think maybe the biggest news of the quarter, at least so far, we still got 2 weeks to top it, is the Bitcoin bond. So El Salvador, just to recap really quickly, issuing a Bitcoin-backed bond for $1 billion, $500 million backed by Bitcoin, another $500 million used for infrastructure, for mining and Bitcoin City, et cetera. Interesting way that it's set up. We talked 2 weeks ago on the show, on the last episode with Adam Back and Lynn Alden about the bond in depth. Would love to hear what you guys think about it after kind of consuming takes from Blockstream and El Salvador and some of the other bond experts, financial experts in the industry. I know Preston, you did a show as well. So What do you guys think about the Bitcoin bond? How big of a deal is it just for Bitcoin, but also for the world and the financial system as a whole? It seems pretty innovative and amazing that it happened like the same year it became legal tender. This is maybe a bigger deal than legal tender. Preston, let's start off with you on this one.
I don't think it's a bigger deal. I think that it's just kind of demonstrating to the overall market, especially for small nation states that maybe are very reliant on the IMF, that, hey, there's another way to do business, especially if you have some type of natural resources that you can harness through the mining process. Because I think Blockstream, I think a lot of these mining companies that would like to, supply a turnkey solution for a nation state that wants to do something similar is there. I think a lot of nation states might not have the ability to push something through as aggressively and as decisively as El Salvador, and that's probably why you don't see them doing it. But what I think you might find is with time and with what we all kind of expect to kind of play out with the price action on Bitcoin, there's going to be this really unique and demonstrative situation where they can see the results of doing what El Salvador did. And I think that's when it's going to really start to take off, not by just one other country, but you're going to see them probably come at, 5 at a time or 10 countries that are just like, hey, we're going to do that same thing that they did. And especially when you look at how this has the potential, and Adam Back has done the math and shown, based on a modest price appreciation in Bitcoin, this could pay off all of El Salvador's sovereign debt within, I think, the duration of the bond itself, which is a 10-year bond. So that, to me, I think 5 years later, you're really going to kind of see how smart of a decision this is. I see it as a insanely smart decision. And it's going to be amazing to watch the rest of the market kind of sit back and watch and then probably trip over themselves to implement something similar.
Yeah, it's interesting. I mean, I think I saw you compare MicroStrategy in El Salvador, which makes a lot of sense that, El Salvador is like the MicroStrategy of nation states. And they're very similar in the sense that they have a visionary leader that developed conviction, relatively quickly and deeply, and has taken action based on that. And so they are leading the way. I think we all thought that, MicroStrategy would sort of usher in this 2020 of just, Fortune 500 companies, like, 10, 20% of them getting Bitcoin on the balance sheet. But that's just how far ahead they are of their peers. So they're leading the pack, and it might be quite a while until we see it happen with another nation state. But Andy, what's your take on the Bitcoin bond?
Hi, Natalie.
Nice. Yeah, look, I really don't have much to add to what Preston said, and probably most people listening to this have already heard the episode that Preston did with Adam and Samson. If you haven't, you definitely should. It was a great one. And yeah, I really don't have much to add. I like the framing that it's the innovative nation state version of Sailor and MicroStrategy, and Bukele is smart, and the Blockstream team are there to help innovate and build on Bitcoin, and it's good for the whole system. And yeah, I hope to see more coming. I wish I knew when it was going to happen. I know it will happen, but we'll just have to wait and see who's next.
All right, so we got into mining, touched on mining there for a moment, and I know that Preston has said that mining sets the floor, miners set the price floor. So we've got to talk about probably one of the major events of Bitcoin this year for sure is the hash rate fallout in China after the ban, and we're back at all-time highs now. 4 or 5 months later, and it's amazing to witness and watch the system do its work and the game theory play out. It's just beautiful to watch as a Bitcoiner. Preston, what do you think this development means for price action moving forward in like the medium term? The hash rate's back up to where it was during right at the point of the ban, and just thoughts on mining in general. I think we're all sort of opening our eyes to what Bitcoin mining could actually mean for the world in terms of like energy development and financial development with the Bitcoin bond, and it just seems more and more possibility opening up all the time on the mining front.
So putting the price aside, just looking at how many miners are back online, the fact that you have everybody tripping over themselves in order to capture the current profitability that's there, to me, is probably the most important piece of all of this, because what it's demonstrating is that the incentive structure to secure the network and issue more Bitcoin into the network to get us to the 21 million cap, it's all still in place. It's still functioning as it was designed and as expected. That's important. Fundamentally, that's really important, regardless of what, narratives or whatever we think the price action that's associated with that mining capacity. When I'm looking at the floor, and I still think that that's, here's the rationale why I think that it sets the floor. When I look at the price chart of Bitcoin and I zoom way out and I look at the 10-year view and you plot it in log terms, I've never seen a chart that looks like that in my entire life. It looks exactly like Metcalfe's law, the way that it's moving. At certain points, kind of in the middle of the 4-year cycle, it almost appears like the price just kind of grinds along the bottom of this trough. And then after you get through another halving event, it kind of spikes and does its thing. And that's kind of where we're at right now, is it spiked up. We didn't get nearly the kind of jump in the same time frame that we had in the previous cycle. And I have no idea. Maybe the China event was a tripping incident where a lot of your speculators were taken out of the market, and we never got the final push like we did in the previous 4-year cycle. That could play out. That'd be very reasonable to me that we would see that. I suspect, based on that floor, that tracking that model, when you go out and you really zoom out and you look at that floor, right? When I look at where the price would be at a minimum and kind of a threshold level at the end of this 4-year cycle that we're in right now, I'm looking at a price of like 130,000, somewhere around in that range. So between now and, call it May of 2024, or whatever the current mathematical estimate of when the 4-year cycle would be over, that's kind of where I'm looking the price to be at a minimum, based on the thresholds that we've kind of seen historically. Now, when I look at the March of 2020 event, where you had the global economy go through a massive credit impairment event, you did see Bitcoin spike below that threshold, but it was very short-lived. It was only there for a couple weeks, and then it was already back up above that kind of threshold that it kind of grinds. I call it like the grinding price threshold. So people might be wondering, so what is that today? Today, when I'm looking at the chart, that's around $25,700 today. So could the price go down to that? Sure. It wouldn't surprise me if it did. If we went through another big kind of liquidity event. So it's really kind of in the middle of these ranges that it has performed historically throughout, these events. Sounds like
Andy
a party back there.
Yeah, are you guys hearing that? There's an event going on downstairs in my co-working space. I will mute myself after I hand this off to Andy. I'd love to hear what you think about the China ban and the mining, resurgence that we've seen. And Preston was getting into the 4-year cycle, kind of price cycle stuff. And we were talking a little bit earlier about, maybe now that we're in new territory, that the market's changed. It's kind of grown past a point to where that 4-year cycle, maybe not play out so much anymore. And we're going to be in this sort of like, cascading liquidations and building that back up, and just kind of like this walk of liquidation events up and to the right. Do you think that we're at some kind of fundamental change to the way the market works in terms of price discovery?
Yeah.
So mining, and then that big question.
Yeah, a few thoughts. So I'm sort of a skeptic of the notion that there's any floor on the price of Bitcoin related to mining. I kind of think it's demand driven. I do think that hash rate responds to price, which just, responds to demand, because supply obviously is fixed. So yeah, I assume that there's no bottom to the price of Bitcoin, and that it can go down to any level, and I act accordingly. That's why I don't use leverage, for example. So that's one. Definitely, the China event pulled the rug out of some things that were going on. And I think this is part of the story of why we haven't seen any fast followers to the Michael Saylor strategy, which is, I got to believe that when he did that informative webinar, I think it was back in February, where he basically opened up the playbook and was like, hey, here's how we did this. Here's the accounting and the compliance and the custody and all these issues that we went through as a board. And here's how you could do it, rest of the world, S&P 500, et cetera. I got to believe there were companies that were starting to run the traps on that stuff. And then we got this liquidation and they said, let's take that off the top of the board agenda and just see how this goes. So, the event basically may have set back corporate balance sheet adoption, at least public company corporate balance sheet adoption, by another 9 months or whatever. I mean, we may have reset the clock in terms of seeing steadying of price and seeing boards get comfortable with that. So I think that's another consideration. And then, as far as the price cycle is concerned, I do think you have to account for change in structure. So if the floor before was set by hardcore hodlers who had conviction, and by the way, had conviction and also had liquidity to sort of incrementally buy the bottom, or at least had enough runway, and income in their lives such they didn't have to sell the bottom. They could just hodl through. I think now if the institutions are coming in, and I think they are, then I do think you are likely to have some bottom buyers that are not constrained in the same way that, retail sort of FOMO momentum chasers were. In other words, I do think you see behavior changes amongst the investor set, and that's to be expected as Bitcoin gets globally adopted. So, I don't assume anything about the future and the size of the duration of the cycles or the magnitude of the downturns and the upturns. I do think it's very possible that we've seen a change in market structure that could lead to less severe downturns, as well as a lack of real blow-off tops like we've seen in prior cycles. But, we'll just have to see. Which, by the way, makes it interesting, to be an investor in Bitcoin, which is, people always ask, even my colleagues ask me, well, hey, Andy, you're always bullish on Bitcoin. Like, there's no price you won't buy. And part of me is like, yeah, that's kind of true, except for if we see the blow off top, right? If price doubles in a month, let's say, I mean, that's kind of a rough heuristic, then I get nervous, then maybe I want to take a little exposure off the table. We haven't seen that yet. And I don't know if we'll see it. I expected to see it, but now I'm not so sure.
Just ask them how their CAPM models are doing.
Oh man, yeah, we've had the discussion. We've had the Preston Pysh discussion of the fixed income market is dead. Get out, right?
Value investing.
Ask them how their 2% IRR on whatever company they're buying marries up to their inflation print of 6.8%.
Yeah.
There's some elephants in the room that they don't want to talk about.
And GMI.
Truth hurts. Truth hurts. Truth bombs for Preston can be painful.
Well, I love that Preston got a shout out to one of our listeners' wives tonight. So you got the radio Preston voice. That was quite a little gift for your wife. We're gonna head over to the after party.
NFT that, buddy.
Yeah, NFT that. Take that. Hello, Natalie, and NFT it. Let's head over to the after party on Spaces. I'll sign us off here. I'll let you guys jump off and pop in over there. I will be there in just a moment. Thanks so much for your time as usual, guys, and looking forward to hanging out a little bit more.
Thanks, Brady.
Thank you.
Thanks, guys.
All right, everyone. That's the end of the show portion of Swan Signal Live. This was episode 72, quarterly report with Preston and Andy. I think this is the 5th or 6th one we've done. We'll continue to do them. They're always a lot of fun format to take a look at what's happened in the past quarter, take a look at calls that those guys have made in previous episodes and check in on those and make new calls. Always have a lot of fun hanging out with these guys. And we do it prime time, which is fun. So Remember, we have gifts going on right now. Bitcoin gifts, as easy as it can possibly be. Go to swanbitcoin.com/gifts, GIFTS, and you'll be able to just send off some Bitcoin to a family member, a friend, somebody who needs some Bitcoin in their lives, which is everybody. And I think it makes a great gift. You can schedule when you want that gift to land in their email inbox, and they will get a course of emails once they accept that gift from us, walking them through what Bitcoin is and why it's important, and how to self custody. Eventually, we get there. So we go through the whole gamut, and we're here to help your friends and family kind of along that journey. Of course, no shitcoins here. Bitcoin only, no distractions. We just give them the good stuff. All right. And we help them understand why it's the good stuff. So we're going to head over to Twitter Spaces right now. I'll sign off playing this beautiful little ad one last time, and see you guys over on Twitter Spaces. At Swan Bitcoin is hosting the space.
This holiday season, give the gift of Bitcoin to your loved ones. Swan delivers your Bitcoin gift along with our world-class education and client service. Create a Bitcoin gift and wrap it with a custom message for your family and friends. Dash away with your gift. Your recipient will receive an email right away. That easy. Give the gift of generational wealth. Give Bitcoin.